Today we'll be teaching you how to use trend lines the right way and how to draw them so you can get the most accurate signals. First, we will explain what trend lines are and how they work. In essence, trend lines serve as diagonal points of support and resistance. The trader creates trend lines to connect a series of prices with a diagonal line. The trend line may be applied to any time frame and can help provide a clearer picture of the trend. Most beginners are confused when it comes to drawing a trend line because they don't know which points they have to connect in order to get the best trend line. The answer is that we can use all 4 data points of a candlestick to draw trend lines. Sometimes you'll see that a trend line connects only the open and close points of candlesticks, and sometimes the trend line connects only the wicks. There's no rule that says which way is the best. Trend lines are always drawn to connect at least 2 data points, but it doesn't mean you have a confirmed trend line because you can connect 2 different points with a straight line no matter where these points are. A confirmed trend line is when the line connects 3 points. If there are more than 3 points connected, it means that the trend line might be stronger and also the trader might get a better signal. There are 2 types of trend lines. The one that is drawn in an uptrend and acts as a support level. This trend line, it's called a bullish trend line or an ascending trend line, and it will always be placed at the bottom of the candles. The other type of trend line is when it is drawn in a downtrend and acts as a resistance level. This is called a bearish trend line or a descending trend line, and it will always be placed at the top of the candles. A trend line will be drawn further into the future and serve as a key level where the trader could search for possible opportunity. This will continue until the price crosses the trend line. There are 3 scenarios that a trader can think about when the price reaches a trend line. First one, it's when the price respects the trend line and move further with the current trend. In this scenario, the trader might open a trade anticipating that the price will move further with the trend. Keep in mind that the price can respect the trend line for a short period of time, giving you the impression that it will move further with the trend, but instead of doing that, it will do the opposite. It will break that trend line and it will go further down if this is about a bullish trend line, or up if this is about a bearish trend line. The second scenario is when the price reaches the trend line and breaks it with no hesitation. This happens when there's enough volume to push the price through that trend line. In this scenario, the trader might open a trade against that trend line, anticipating that the price will go further down if it broke a bullish trend line, or up if it broke a bearish trend line. As a tip, we saw that this scenario happens when the price respected the trend line many times and at some point it starts having a lower volume. This aspect can be seen when the price starts to create smaller candles. Just take a look at this example. You can see how the price respected the bullish trend line many times, and also you can see the sizes of the candles. When the price starts to move slower, it will create smaller candles that have less volume. At this point, the buyers start to lose their power, so we can expect bigger downsides moves that will drive the price to break that trend line and go further down. Same aspect applies when we have a bearish trend line, but this time the price will break the trend line and go higher. The third and last scenario is similar to the previous one, but this time the price will come back to retest the trend line. This is the most used method by traders when the price breaks a trend line. In this case, traders usually open trades when the price comes back to retest the trend line, anticipating that this is a break and retest move from the price. This is a safer method to trade trend lines because when the price comes back to retest the broken trend line, it actually comes to take some liquidity from the breakout traders in order to make a reversal move. When you spot one of these scenarios, try to find a good confluence. Don't think the price will go down if it broke a bullish trend line. If it was like that, then trading would be too easy. Always make sure you have a good signal before you open a trade. The trend line's degree is an important aspect when it comes to its strength. The steeper the trend lines is, the less reliable it will be, and this happens because a very steep trend line refers more to an impulsive move that probably won't be sustainable. In that case, if the trend line is very steep, there is a better chance for the price to break it. Try to use a trend line that's not too steep. You can also watch the candles to see if there is an impulsive move or not. When there is enough volume in the markets to form impulsive movements, the candles will be bigger, and this means that the price can move quite a lot in a relatively short time. Beside the steepness that help us know the strength of a trend line, we can also watch how many times the price reached the trend line. If the price reaches a trend line for many times, it becomes stronger, and this happens because the price accepted the specific level as support or resistance. But this is just one way to look at this aspect, because the other one, it's saying that if the price reaches a trend line many times, it needs to break that level at some point, because supports and resistances don't hold forever. Again, this would make trading too easy. There are a lot of approaches when it comes to trading because there's no such thing as a 100% winning strategy or a tool that works perfectly every time you use it. Because the markets are moving continuously, you have to make sure that your charts help you with the current situation. When you draw a trend line on your chart, you expect it to last forever or at least for a long period of time, but that's not the case. Sometimes the price will move a little bit above or below your trend line and still respect it. If this happens, make sure you adapt your trend line. You can adjust it in order to connect the newly data points. And if we talk about this aspect, don't think your trend line represents a certain level that the price will respect 100%. You'll have to look and consider your trend line more as a specific zone where the price might react. In order to increase your odds, you can combine trend lines with other trading tools, such as horizontal support and resistance. Take a look at this example. You have a confirmed trend line and the price is about to reach it again. If you take a closer look, you can see how the price created a resistance zone. At this point, if the price hits the trend line and at the same time the resistance that was created, then there is a good chance that the price will respect the trend line again and reject it. This was just a simple method of how you can increase your odds using trend lines. We'll explain more on the next videos. If you liked this video, don't forget to subscribe as this channel is new and it will help us a lot. Thank you for watching this and see you on the next ones.